Hello, traders. It's 8:02 a.m. Chicago time on Thursday. It's Thursday, the 25th of February, 2021. Thanks for joining me in episode number 1944. There was no trader bite yesterday. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's pop right in and take a look at the Convergent Trading pre-market summary sheet. We're seeing risk-off sentiment just slight so far today, with gold actually leading the pack down. Gold is now 1.1% lower. Gold is trading down $18.60, trading at $1,779.30 April. In the April contract. Silver, by the way, just rolled to May 2021. Silver's trading at 27.82, down 10.5 cents or 0.37%. The Nasdaq is weak this morning, trading down 120.75 points or 0.91. That's how things are shaking. What's getting inflows? The euro leading the pack this morning, up 0.54% currently. The euro is trading at $1.22, $1.85. The cable, which has been on a tear, is up at 1.4148 this morning. Stronger. The euro stocks are stronger. The Dow is up. Again, the Dow is a price-weighted index versus a cap-weighted index. So the stock with the highest price has the highest weighting as opposed to the highest market cap. So keep that in mind when you look at the Dow and where it stands. The Russell, pretty close to break even. The Russell's trading almost unchanged, just teetering around unchanged, and so on and so forth. Pretty much everything else is off, including the 10-year and the 30-year. The 30-year bond is down quite a bit. Actually, over a handle and a tick right now, which is kind of interesting as prices come off in the indices as well as the treasuries. So that's where that stands. This morning, what has been driving the market? U.S. yields continue to rally. There's some stuff going on with the FAA and Boeing 777 engines, as we talked about the other day. And a couple other things. Futures tracking the tech-heavy Nasdaq edge down as investors sold growth-oriented technology shares for stocks that stand to gain from an economic rebound. European equities rose, supported by stronger-than-expected growth in Germany's economy. Chinese shares closed lower as investors were worried about high valuations and growing concerns of tightening in policies. The dollar was little changed, while gold prices gained, which this is not true anymore. Gold has fallen. Crude today is also off 40 cents, but still trading above the 60 handle, trading at 62.82. That's where we stand this morning. What are we looking for today? We're looking for, and by the way, GameStop is rallying pretty good. We're looking for ECB's windows. We did get some big numbers out of the U.S. This morning. We did get the initial claims, GDP, and we're looking for pending home sales at 10, Fed's Quarles speech at 11:10, Fed's Bostic at 12, and Fed's Williams at 3. The ES has traded 286,000 contracts. A little more than what this sheet shows, as the market does not stop just because we printed a sheet, right? Overnight inventory is still short 24% or so. The market has moved exactly 30 points down, and it's in a very, very interesting place. So that's where that stands. Again, no trader bite yesterday. I had my annual physical. Hopefully you're keeping up with yours. Health comes before everything else. Without health, we are nothing. So I'm not going to do a review of the prior trader bite. There's no point to that. It's 2 days old. A lot has happened since. But let's take a look at what has happened yesterday to look at the narrative of what we've got. Yesterday, by the way, if you are in convergent trading, I did an impromptu yesterday when I came back from the doctor's office and went over quite a bit. I would strongly suggest you look at that impromptu. It is in the recent webinar section of the community portal, the member portal. It'll only be there for 2 weeks. Check it out. It's still relevant this morning. Beyond today, it's not likely to be relevant to the current action. But yesterday, we opened inside of this low volume zone from the prior session. Low volume zone from the prior session, and we had an open auction, and what it looked like for a minute, it looked like the market would be responsive towards the prior day's most accepted price, which is down at 38.44. And so what we got is a responsive push on what was an impulse. The expectation is it would likely pull back and continue and work its way down into the point of control. If it does not and it pushes back above the mid and VWAP, then we're back to a neutral stance as opposed to being short biased, and that's what happened. It tested and tested, and as I pointed out in the impromptu yesterday, you've got a weak local high from the open. The opening swing had a weak local high. It hit that 74.50 twice. So we have a local double top there, and then it hit it again a third time. So now my bias is actually long. I'm looking for the long. However, the long here was really tough to hold on to. I mean, you'd have to use a pretty darn wide stop to hang on to that long. But the expectation is these guys are likely to go. I know traditionally in many books it talks about how a double top and a triple top shows strong resistance, but in auction speak, a double top and a triple top create a weak high, and it tells us that the auction is starting to accept those prices, the exact opposite idea, and I guess that's what makes a market, right? So it dips back down. It dips back down into the 56.75 low and pushes to 55.50, which kind of throws a wrench in things, and then it finally starts swinging higher. We have an impulse of 11.5 points. We get a pullback, and then finally we have the range extension up. But overall, well, I didn't talk about it, but overall, we are looking for the one-time framing to break at 62.25. If that breaks, then the overnight high becomes the next target. That was at 96.50 yesterday. If the 96.50 goes, then it's 39.99. If 39.99 goes, then 39.09 right here is the key target. It is the big balance point. So we can see the lay of the land a little bit better, and so we can judge the auction a little bit better on the daily composite chart. One time framing down, one time framing down, one time framing down, and then we open, and then we test down, and then we turn around and start pushing. And once we breach that 92.25, we expect a spurt up, a stop run, which we didn't see yesterday. The take of 92.25 actually had negative delta in it, so that was interesting. But the idea here is if it takes out the 92.25, the one-time framing down comes to an end most likely, and then once we clear the 3,900, then we're looking for the 39.09, which is this price. It's the volume point of control for this region above, and that was the station that we wanted to pay attention to and get off at for the longs, 39.09. So that was pretty sweet. That was pretty sweet. Currently, where's the market? Haha, 39.05. This is the magnet. So we finished yesterday at highs, pretty strong finish. The auction was incomplete last night. As we came in, the auction was incomplete. It did not really find sellers. What does it mean? An auction is incomplete. It basically means that it has not successfully located the opposing force. Now again, look at how we closed. Let's just isolate the profile. Look at how we closed. We had a thin trend type profile with the point of control at the high of the day, near the high of the day, and we closed in the upper quartile, right? And so this close here gives us a very high probability of a continuation higher in the extended trading hours, and we got that. The next price up is 28 up there. And so what do? We open up. Let's slide this down a little bit. This is yesterday. Again, the point of control near highs. This is fuel for further push. We push to 34.50. We immediately reopen, push to 34.50, go sideways for quite some time, and then we start to rotate down with a European open. The Europeans come in and they press the sell button, and here it goes. It falls, and then we end up getting a pullback to the mid and VWAP right here, and then we walk away from the full session VWAP midlines, creating what is a trend. This is a long liquidation trend, but in the context, even though it's 30 points, in the context of yesterday's action, this hasn't gone very far. This simply has overshot the 39.09 and has come back to it. That's all we've done. We've gone to 39.34, somewhere in here. So all we did is we overshot this, and we're coming back to meet the 39.09 right here. And that's where we are. Consolidating at 39.09. So last night when I was doing my homework and prep and sharing it in the Head Trader channel at Convergent, I said, note ES had a clean reversal date up day with a close above 1 vol sigma, making it an impulsive, this being an impulsive up day. The expectation given the closed location as well as the VPOC near high of range speaks of a likely push through the high overnight and then rotation balance to rest most likely. So that's exactly what happened. We expected it to continue higher and then to take a break, take a breather. It sprinted yesterday up a big hill, and so it's likely to take a breather today. So if we find ourselves, I said we are above 39.09 again, so the all-time high of 45 even, which is also a weak high, there's a double top up there, is now vulnerable. If we fall from here overnight and end up below around 39.09, then we're likely to churn Thursday. Here we are Thursday, and where are we? At 39.06, basically 39.09. So this is your churn Thursday. That's what we're coming into today. That's what we're looking forward to today. And there's not really a catalyst that's likely to push us away from here for now. So I'm expecting this to be a rest day. And given that it's a rest day, with the point of control of yesterday above us, yesterday's point of control, in case you don't have volume profiling, is at 39.22 or 39.06 right now. Does that all make sense? Hope it does. So that's where we stand here this morning. Let's take a look at what's expected so we can wrap up. Here's what's expected today. All right. Here's what's expected today. So we've made it below the point of control. We are on top of the 39.09 MC point of control over here. The expectation today is an open auction in range, choppy. I'm expecting it to respond higher. The initial expectation is a response higher, and I'm looking for it to cross, push the overnight low, and swing down into this 3,900 area again, potentially dip below the 3,900, but overall I'm expecting it to stay in this magnet area overall. I'm not looking for a lot of range today, maybe 15 points in the RTH. I'm looking for the volatility to get sucked out of this thing, and I'm looking for it to then gear up to start walking towards the 4,500 maybe tomorrow or the next few days. The fact that we're above 3,900 and checked all the way up to 34 and we're hanging out here means that that high is vulnerable, as I had spelled out a few minutes ago regarding my notes from last night for today's prep. The secondary is an open that immediately pushes the 3904, 3900, squeezes below into the mid 90s, something like 92, 93, something like that. 92, 93. And then I'm looking for it to fight its way back into the 3900 and to walk back towards the 22. That's scenario 2. There's a potential for scenario 2 to continue to squeeze higher towards yesterday's high. But those are the two main ideas. Today I'm going to take a different stance. Now, I said on Tuesday, I believe, I said, hey, we're coming into a target-rich environment. And we did, right? Look at this. I mean, we pushed some serious levels. We pushed through the 92, the 62. We pushed through the 80. We pushed through the 88. We pushed into 92. We finally tested the 92 yesterday, pushed through the 3,900 all the way up to 09, and then we exceeded that by squeezing all the way up to putting in a high at 2750. Pretty target rich the last couple of days. Well, today it's likely to be relatively choppy. Good rotations. Today is likely to be a good scalping day or short time frame trading type of day. That's what's expected. The market has come a long way over the last couple of days. It is likely to rest, and the fact that we are on top of an MC point of control tells me that this area is likely to be magnetized. As it moves away, there's going to be a tractor beam back to 3909. If it falls below, there's likely to be a tractor beam back to 3909. So this is why these two scenarios are looking for it to kind of waddle its way above or below, but end up somewhere in the middle. That's what I'm looking for. I hope I'm wrong, by the way, because I'd love for this thing to do an open test drive and just rip one way or the other, but it's not likely. So I'm coming in with those expectations, and I can save myself from flailing around and fighting whatever I think the market is going to do. That alone is worth all the prep work to tell me, hey, you're in a very important area here, a magnetized area, a big acceptance area. So back off, chill, pick your spots, potentially go to scalping, things like that. Expect a rotational market. That is very valuable, in my opinion. Okay, that way you're coming in and approaching things as a professional, and you're prepared for what the battle is likely to yield. Good luck, and I'll catch you tomorrow. Take care.